Okay, we are now live. So good afternoon, everybody. I'm Pierre Roberge, the Daily Trader. It is December 4th, 3:47 p.m. So we are doing the Tesla Weekly Live like we usually do every single weekend on Sunday. But this time, because it's close to the first of the month, this one is free to the public instead of being only for my members. So three times a month it's exclusive to my members, and once a month it is open to the public like it is right now. So what we are going to do today is take a look at the Tesla stock from a technical analysis perspective. We are going to look at the daily chart, we are going to look at the weekly chart, and we are also going to look at the VIX, the Dow Jones, S&P 500, and also Nasdaq composite. All of them also from a daily and weekly chart. So I do this live so that to give opportunity to people that are a little bit new to technical analysis to ask questions and comment and so on. So this is going to be interactive. So you can post things here. I'm gonna do some analysis for Tesla, then I'm gonna go back to the comments and back and forth between this. So hello Dante from Alberta. Uh, Oilers. Well, you know what? I don't even watch hockey at all. Oilers, they beat the Habs. Okay. Well, I don't really like the Canadians, the Montreal Canadiens, because yes, they used to have a great team, but since they fired Jean Perron after having won the Stanley Cup, I think this was 25 years ago or even more than that. They fired their coach after having won the Stanley Cup, and he had been the coach for only 1 year. So he won the championship during the first year. So then, okay, that's it. You are too dumb. You are too dumb. So no. But so yes, I'm happy that the Oilers won. And I remember the time when Gretzky was in the Oilers and Dave Semenko and all of that. So, but we are not here to talk hockey. We are here to look at Tesla. So let me start with Tesla Daily, the daily chart of Tesla. So Tesla closed at 194.86. That's up 16 cents. Up 16 cents. Yeah, that's not a lot. That's 0.08%. If we only look at the increase over yesterday, we might be thinking, oh, this is fantastic. Tesla is up. Yes, but we always need to look at Tesla and any other stock from the context they are in. So this is really important. So if we look at the context, we see that we made a lower high than yesterday, and we also made a lower low. So you know this is the definition of a downtrend. A downtrend means that stock is going lower and lower. The close, you know, the candle is getting lower and lower and lower. The close sometimes is counter to that, but just look at it here. You know, we see we are still in a pullback. So let me give some context to people that are new to our channel. So if you look at this here, we had a downward channel for Tesla, and you see how a downward channel works. This is what Tesla is obeying as a channel. So Tesla made a top on September 20th, and then it dropped, and it went and touched this line right here, which we call support, and then it went on the other side, which we call resistance, and could not break outside of it, and it just caved in. Tried again, caved in, caved in, caved in. We caved in, but we did not went on the support side here. So we did not go on this support side. So Tesla started to become a little bit stronger and stronger, and starting to go on the resistance side. This is what we call the resistance side. So it started to go on that side. It did not reach it, fell, and lo and behold, starting from November 21st, then it started to move back up, move back up, move back up, and then break this downward resistance right here, break outside of the channel, break outside of the channel, boom, break outside of it. So now we can say that this downward channel has been broken outside. So basically we are no longer in a downtrend for Tesla, you know, a shorter term downtrend. So this was a downtrend that started, as I said, September 21st. So this was a recent downtrend. If we pull back, we can see that, you know, we are not making higher highs with Tesla. The big high was last year. So since last year, Tesla has been basically dropping down. So here on the channel, we don't hold something that is dropping down, because this is, you know, we don't like when our portfolio goes down. Some people don't mind it because they think, or they say, and they might be right, oh, it's gonna come back up. It's gonna come back up. Yes, most likely it's gonna come back up because Tesla is a great company, but why hold it while it's going down? Just sell it, let it go down, and then pick it up when it starts to go back up. So this is the thinking that we have here. You don't need to agree with this thinking, but this is why we have different channels with different people making different content. So now we are outside of this little bit of a downward channel. So it means that Tesla is not coming down as fast. It's not coming down at that rate anymore. That rate of move down has stopped. So something has changed in the market. And right now, we are in a congestion zone. So a congestion zone is basically, it's not a bullish channel, it's not a bearish channel, it's a sideways channel, going sideways, going horizontal. So right now, this is where we are. And when we are going to break this resistance right here, 198.12, we are going to be outside of this congestion zone, horizontal channel. We are going to be outside of it. So we don't know when, and we don't try to predict when, but when it is going to happen, this is going to be an indication for us that Tesla is resuming an uptrend. So in that case, we don't know when. It could be tomorrow, it could be in 2 weeks, we don't know. But when it is going to happen, this is a milestone. And we, what we do is that we identify those milestones, and we can decide to go long when that milestone is going to be reached. And along that milestone, breaking 198.12, it tried on Thursday. It tried really hard, but it broke below. You know, it did not break above. If it had broken above 198.12, then we would have said, okay, maybe the milestone has been reached. So that's not the case, and now it's coming down a little bit, and we are going to take a look at it every single day of the week. So I do a Tesla VIX Dow Jones videos every single day of the week, where we take a look at what Tesla and the indices have done. Along with breaking this 198.12 milestone, we like to take a look at stochastic also. So stochastic is helping us a lot, because sometimes a stock will break a resistance like it did not do here, but sometimes it breaks a resistance, but there is no stochastic above 60. That's this line here. When there's no stochastic over 60, even though there is a break, we should not really believe that break, because there is risk that the break is just a fake break, and then that the stock can come back down. So we like to combine a break in resistance with a stochastic over 60 to indicate that the stock is really meant to break it. So we did not get it on Thursday, and we sure did not get it on Friday. And now we are just going to watch and see what is going to happen. So from a technical analysis perspective on the daily chart, so Tesla does not seem to be ready to start going back up yet. Could be ready tomorrow, could be ready in 2 weeks, but it's not ready now. And we are just staying put and not trying to guess and predict. Because when you predict, you have a great possibility of being wrong. But if we don't predict, then we just act when we see things happening in front of us. Just like a lion does not predict, well, okay, I'm going to just sit here. I'm sure that there will be an antelope coming here tomorrow, or in 2 hours, I'll see an antelope here. Okay, that's prediction. 2 hours, can he guess it? Maybe 5 minutes, because he saw one over there, and maybe within 5 minutes she is going to be in front of him. Yeah, maybe, but 2 hours before or 2 weeks before, no. This is not how he hunts, because he would starve. So he just watches what's happening, and when he sees one, that demonstrates a certain type of behavior that he likes. A limping behavior, blah, 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 blah. And yeah, boom. He's gonna act when things are right. And for us, when things are right is stochastic over 60 and Tesla stock at 198.12 plus. Hello, David. Have you seen Tesla in the last 3 months? Incredible. I'm glad I showed you. No, I did not look at it. I did not look at it. Is that how it's written? Oh, sorry. I guess I'm not. Yeah, I think I wanted to look at this. Let's look at it for fun. This is why we are here, huh? Every single day of the week, I do the videos, you know, 2-3 minutes, boom, 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 boom. I talk about the usual points, the important points, and then it's over. Right now on Sunday, it's Sunday, so we are, you know, we take our time. So this is why we are here, to try stuff and to discuss. So where's the Tesla? Yeah, this is the bear. Yeah, this is the bear. This is the bear stock. Look at this. Look at how the bottoms are all aligned. You know, this is not. This is not a coincidence. You know, there's definitely a trend. So yeah, so Tesla is the inverse of Tesla. So Tesla going up, Tesla's going down. So I don't remember what I said last time, David, but if you're happy, I'm happy. So Ronald is telling us that what's happening with my stream here. Hello, just hang on a second. Okay, so Ronald is telling us loaded on some 225 calls. Yes, well, Ronald, yeah, this is called taking a chance. So sure, Tesla is in a congestion zone. In my opinion, there are no indication that it's going to be there in 2 weeks. So you are taking a risk, which is fine. We are all taking risks. I would suggest that if you wait until Tesla crosses 198.12, then your risk would be significantly diminished because once we break 198.12, if we do, then most likely we are going to go reach the next resistance. The next one is 205, and 205 is so close, so maybe we are going to extend it to what you say. So we have the resistance here at 229.77. So yeah, everybody makes their own decision, so I don't question that. I'm just giving you my opinion here. But you could make money, you know, who knows? Quick trade and great analogy. Well, my pleasure, Tim. Also appreciate your video when you called 187, made some moolah. Puts in covered calls, look forward. Okay. So you know me. Okay, that's good. So I just did not know if you knew me, so this is why I wanted to tell you what I thought. But since you know, it's perfect. So yes, what I do basically is that I trace the most important support and resistance lines so that it can help you guys, basically. So I'm not telling people when to buy and when to sell, but I'm just analyzing the supports and resistance so that people can, as Ronald said, well, okay, well, there's a significant resistance at 198.12, so if it breaks that, it should continue. So then I'm gonna wait until it breaks that, and then I'm gonna buy something at that point. Perfect. So you can use my information as you want. I don't take any responsibility. But well, I try to get the support and resistance right because this is a labor of love for me, and I like to have those right. So this is what I try to do, to have those right, and then you can do the rest. Okay, so basically we are in a congestion zone. I said my piece, 198. If it goes above 198, that's a buy. If it stays between 198 and this one here at 166.95, if it stays between these two, no, this one. So if it stays between these two, then this is just a congestion zone. So it should zigzag between the two. If it breaks 166.95, then that's a sell. That's it. So and we are going to adjust this every single day, free on my channel. So subscribe to get my videos for free. I usually get them out by 5 o'clock. And well, you are welcome, Ronald, for this comment. Okay, let's look at the weekly chart of Tesla. So this is on the daily chart. So weekly chart, what's happening on the weekly? So weekly gives us a broader look. So we see that stochastic is not ready to come even close to being over 60. And we need stochastic over 60 to have a move. So, you know, if we look at the past here, we can really see it. You know, we lost stochastic over 60 right here, and we gained it back here. So yes, the stock did not break down much, but it just went sideways, and sometimes it's going to do this, and sometimes it's going to do this, and sometimes it's going to do this, and sometimes it's just going to do basically this. But my personal strategy is when I lose stochastic over 60 on a chart, whether it's weekly, daily, hourly, I am close to be selling because I know that the stock has no power in it at all, and why risk my money? And then when it starts back up, then I can get back in because I know that it has gained some strength. And then when it breaks over 60, and yes, sometimes it does these little blimps that are bugging me, but what can I do? And when it loses it again, then it falls. And sometimes there's a little bit of a false signal right here, but with a tight stop loss, it's okay. And when it loses stochastic, this one was a, wow, a big drop. And here it did a little bit of a kind of a fake, but with the close stop loss, you're okay. And then it lost stochastic over 60 again. So it's not perfect. It's not perfect. It's not perfect, but it's not perfect, but it's pretty good. It's pretty good. And anyway, nothing is perfect. It's sad, but this is how life is. Perfection is not of this world. So yeah, okay. So weekly chart. Yeah, no power in the stochastic at all. So on the weekly chart, one candle equals 1 week of trading. And if we don't have stochastic over 60, this could mean that, yes, the stock could be going back up. And stochastic might be coming here. It could be going up to here. And if we don't have stochastic over 60, we could have something like this. So this is what the weekly chart is telling us, is that don't believe on the weekly chart any move you have until you've got stochastic over 60. So this means that we could have a nice move on the daily, but on the weekly I would hold off. And weekly, if you are investing on the weekly chart, then it means that you are investing for a longer term. So Tesla is not ready for the long term. And let's look at the monthly chart also. Monthly chart is not ready also. It's not ready. You could have a blimp, but that does not mean that the trend has changed. So daily wise, there's no bull trend yet. Weekly wise, even less so, and monthly wise, even less so. So yes, you can catch a little bit of a swing on the daily, that's fine. But just be prepared to sell if it comes back down, because weekly is not there to support you for a weekly run. There's no weekly bullish run. There might be, when we get stochastic over 60, a daily bullish run. We don't see it yet, but it might be coming. But yeah, this is just to set the expectations, because once you have the daily chart giving you a bull signal, you know, a bull signal, let me say, you know, approximately here, you know, when we broke outside of this, it bounced. So we had stochastic over 60 here. At that point, if we had the weekly chart also giving us a bull signal, when you have a bullish signal on the daily and weekly, then you can expect your daily move to last a long time, because there's also a weekly bullish trend that's pushing it. Right now, we don't have that. So right now, the strategy is any move on the daily you get, consider it a temporary move. So if you enter on the daily, you should exit on the daily. So maybe a couple of days, maybe 10, 15 days, and maybe it's going to be over. Yes, Tim, can you comment on how do you determine your stop loss when buying a stock? I always do the stop loss based on a horizontal, no, based on a support. So if I have a move in Tesla right here, where can I do it here? So let's say that okay, let's say that we broke this here, you know, when we went down. This was a downward resistance, and we should not buy before breaking this. So even though we had stochastic over 60 here, we should not have bought it because it did not break the resistance. When it breaks the resistance, okay, the first day it broke the resistance and then stochastic was over 60. So that was good. So then what I like to do for a stop loss is that I put a stop loss. I find most of the time a horizontal support that's not too far away. So I judge this by how much money I'm willing to lose. So if I bought here at 244, there was some support right here. Some support that became resistance, So at 242, and this was a pretty tight one, but at 242.86, there was some support right here. So if it breaks back into the resistance that it broke, that's for sure a bad sign. Because if you buy because it broke a resistance and then it comes back in, then there is no break in resistance anymore. So theoretically, you should get out because your signal just got reversed. But I prefer to give it a little bit of leeway. So I find a horizontal resistance, a horizontal support that's just a little bit farther away. So the next one that we find here was at 242.86. So then I would set it at 242.86, and then you see what happened on that next day. We came back down to the resistance. It did not cross it. Well, it should close below the resistance in order to invalidate the previous buy signal, but it did not do that. It just touched it, and it did not even reach 242.86, and then it launched. So it's just a matter of, so in summary, what made you buy it need to be reversed. A break of resistance makes you buy it. A unbreak of resistance should reverse it, but I give it a little bit of a leeway with a support that's further down. So I hope it answers the question. Okay, so I said my piece with Tesla. So just be careful. There's no bullish anything yet on the daily, weekly, monthly. There. Okay, let's go see the VIX. VIX, I'm really surprised that VIX is coming down like crazy. VIX is coming down like crazy, and look at how perfectly it fits the line. And then this other line here. So the stock market is not random. It follows lines. If it was following curves, then okay, yeah, we could say that, well, it's pretty much random, or Elliott wave kind of thing is okay. I won't go into that, but it's following straight lines. So why not use that? So basically, the VIX is coming down like crazy. So this should be making the stock market go up, and we are going to take a look at Dow Jones soon. But Tesla is sometimes a different beast, because Tesla, people don't like that Elon Musk has bought Tesla, has bought Twitter. So people, there's a lot of things in the on the mainstream media. So this is why I think Tesla has done worse than the indices. But what can we do? Even though Tesla has great fundamentals, it has been coming down. And what counts? We don't buy stocks because we just want a great fundamental. We ultimately want the stock price to come up. So this is our metric. The metric is the stock price going up or down? This is the metric we should be following, because this is the metric that is making us money or making us lose money. So this is why we pay so much attention to the stock price, because the stock price is the end result, of what everybody in the world is thinking about Tesla and looking at their behavior. So VIX coming down, and look at this, is coming right smack on our support that we had for a long time at 1906. And guess what? It just closed exactly at 1906. So now we have an interesting thing that could be happening. So we are at a juncture point. Are we going to break lower than 1906 or not? So I don't know. Nobody knows. But we should pay attention to this. If we break 1906, this is going to be a milestone. Because we tried here, we could not. We tried here, we could not. Then we are trying right now, and I don't know if we are going to just continue or if we are going to break up. If we start going back up, then all of the indices will start to go down because the VIX is inversely related to the stock indices. So when the VIX is coming down, the stock market is going up, and vice versa. So we are at a juncture point. So let's just, so there's nothing to say here. I don't know if it's going to bounce or not. But 1906 is the number that is going to tell you if it breaks through or if it bounces. And we could give it a couple of candles. You know, sometimes we have a break. So to be a little bit more sure that you have a break of support or resistance, you can wait for 2 days, you know. The first day it broke outside, and then the second day, it came back in. So the 2-day rule is quite interesting. So here the same thing. It broke outside. Oh, it's coming down. Then the next day it's coming back up. Oh, shoot. So sometimes, so just to be sure, and sometimes it just obeys perfectly. It never crossed 1906. So that's a lever you can use if you are risking money. You know, if you don't want to risk that money as much, wait for 2 candles when you have a break. If you don't care that much, just go in after 1 candle. Let's look at the weekly briefly. So weekly chart, okay, so this is, you know, we had the uptrend right here, and we just broke outside of the uptrend, so that's nice. And we are basically on that support right here. Stochastic is below 60, so technically there's no force to bring the VIX back up. But a support is always more important than stochastic. So even though stochastic is telling us that there's no force to prop up the VIX, then it's resting on the support. So the support is more important. Oh, look at this here. So from a monthly chart perspective, we get a broader view, huh? So this broader view, longer term view, so 1 candle equals 1 month of time. So on this broader view, you see that we are still in an uptrend for the VIX, and it has been so since, I'm going to say, September 2017. So it has been going up. So right now we are in a monthly bullish channel, but shorter term, we are coming down. And if we break 1906, then the next number we are going to take a look at is this one here, which is 1596. So 1596 would be where we touch this support right here. 1596. I need to write that somewhere. 1596. 1596. Okay. It's going to be here. It's going to be here. It won't represent the value everywhere because, you know, this is an increasing support. So, you know, its value is increasing all the time. But it's going to correspond to this part right here. Okay, let's take a look at Dow Jones. Dow Jones, you know, it was in a descending channel since January, since the beginning of the year. So since the beginning of the year, it was a little bit harder to make money going long because stock market was going down. We broke outside of this. We came back down, we came back up November 10th, and we went and reached 34,690, and we seem to be stopping right there. Stochastic is super good. Everything is pretty much good. Everything is pretty much good on the indicators right here. So another very important milestone right here. Are we going to break this or not? Let's go weekly. So weekly, we still have a weekly bullish trend because we had this nice move up here. So weekly trend. So weekly, it's still bullish, and monthly, yeah, monthly. Look at this. We had a break in resistance. So monthly, it's still bullish too. So what we see right now in the stock market is bullish compared to Tesla. The Dow Jones is bullish on the daily, bullish on the weekly, and bullish on the monthly. So Tesla is really having a different type of behavior. And it's starting to look like we are going to have this congestion zone. So Dow Jones could easily go as high as 36,641 if we break the horizontal resistance we have on the daily. So it's perfectly valid for the Dow Jones to do something like this. So this is between, what is this number? Is that 29? Yeah. So between 29,572 and 36,641. That's what it's allowed to do. I say that as a tongue in cheek, but this is what it's allowed to do. So yeah, this is where the upper resistance is that we had on the monthly chart. Let's look at the S&P 500. S&P 500, a little bit different game, because S&P 500 does not have the same stocks as the Dow Jones. So this one is really into a bullish trend within a downward trend. So S&P is still within a downward trend, and it has not broken outside of it yet. So right now it's not really the time to get in because there's not much room before the resistance to make money, because it could be caving onto this resistance. So just be careful. So it's not the time to get in. The time to get in was when stochastic was over 60 right here, and this was the right time here. But now it's a little bit late. If it breaks, maybe we are going to have a pullback, and then we are going to launch again. So let's just wait for that break before. Well, you can do what you want, but I'm going to wait on this one. Weekly chart. So weekly chart, we have a good stochastic. So this is interesting. So stochastic over 60. So this means that the weekly chart is bullish. Monthly, not yet. So depending on the time frame that you are looking at, if it's bullish or not. And if your time frame is on the daily chart and you are in, then just be careful to come out if it does not break this resistance. If you are not in, don't get in right now. Just wait to see if we break this, or if we break this support and starts to go down. So I would tend to short under 3993 for S&P 500. Okay, no, monthly. Did I look at the monthly? No, I did not look at it. Okay, so monthly, we don't have any push yet. So so monthly is not bullish again. It's not bullish. No, and if we draw this, you see, it technically broke it, but we need to wait until the end of that candle. So this is a December candle, and we are only the 4th of December. So So this candle could be a green candle or it could be a red candle. So we cannot conclude anything yet. So longer term, we don't have any indication. So monthly wise, we don't have any indication that Dow Jones is in a bull trend. And last but not least, Nasdaq Composite daily wise. Okay, let me clear that up a little bit. So daily wise, what do we have? So we came outside of the downward channel, so it's not coming down anymore. So that's one thing. Now we could be going sideways. So basically this is what's happening. We have support resistance right here. This is extended here at 11,565. So if we break this, then we would be continuing this bullish channel and we would be breaking an important resistance right here at 11,565. Besides that, I would stay put. So I would wait for a break here. Stochastic is good, so we could be flying if we break. Weekly chart's not there yet. Weekly chart, Nasdaq is not as good. We don't have stochastic. And this is a good example here. You see what I was talking about? So we have a downward channel here on the weekly. And then we had a break. So we had a break. One candle break. But stochastic. Oh, did we get stochastic after this? Yes, we got stochastic. We got stochastic at 60.81 and we need 60. So this is an example of a buy signal that needed you know, a stop loss because it turned out not to be good. So you know, we see this candle right here, the bottom of this candle here. So I think I would have put my stop here at I did not, well, I don't remember if I did that trade. I don't think so, but 12,675. And yes, it's, yeah, that's quite a stop loss. You know, you can lose a significant amount here with options, or you can play it tighter on the daily or on the hourly chart. But if you play it on the weekly chart, you know, this is the amount that you lost here. But then when it broke back, you should have shorted because you did not have stochastic over 60, and then we broke back in, so you would have come back in here. It did this, it pulled back right on this. Stochastic was not there, so it was less scary, and then this is the move that you could have taken, and you could have took a profit at the next big support right here. So yes, you could have lost this part here in terms of height, and you could have gained this. So it's not too bad. And then let me see. So that's a weekly chart. So weekly chart, Nasdaq, there's no bullish trend yet, and monthly, I doubt it too. So no bullish trend here. So Nasdaq is not doing as well as, and I could do some cleanup right here and just put some nothing on the month and just clean this up a little bit. So that's it. This is what I do every Sunday for my members. Today I'm doing it the first of the month. I'm doing it for everybody. So this is what we do on Sunday. We take questions. We look at different things. So I hope you enjoyed this, and I'm finishing up this cleanup soon. So I hope you are enjoying this. Technical analysis, I think, is really interesting because it's giving us a different set of tools than just news and fundamental analysis. And we saw with Tesla that fundamental analysis, you know, can make you lose half of your portfolio within a year. while still hanging on the hope that Tesla will bounce back up. It should bounce back up, but this is giving us a different tool. So the stock market price is the metric versus, well, for a technical analysis, and for fundamental analysis, what is the metric is the hope. In 2025, Tesla should be worth $2,000 a share. Okay, maybe you're right. So that's a different way of thinking. So this is why I share this here. So thank you guys for joining me. Thank you for the questions, always appreciated. So you can join my channel if you want to follow me every single day to look at Tesla, Dow Jones, VIX, S&P 500, and also Nasdaq. So I'm going to wish you a great rest of the weekend. And I'm going to tell you à la prochaine.